Welcome back to Accounting Grade 12. So let's just take a look at this list. And this is like a thinking exercise. What exactly do these things have in common? Air Canada buys an airplane. A small business purchases a new car. The university receives tuition for a year. A cleaning company is paid to clean the office for the next year. An advertisement company is paid to create an advertisement next month. And an office is purchased. I'd encourage you to pause the video at this point and give it a few minutes to think about. Now, having a chance to think about these things, these are all things which will have an effect on more than one accounting period. So this is where we start to get into lesson 5, adjusting entries and gaps. And we go back and take a look at gaps, generally accepted accounting principles, because this has to do with a specific type or basis of accounting. So let's just go through what exactly we're talking about here. Time period assumption. The economic life of a company can be divided into artificial time periods. Specifically, we could do months, quarters, years. Year. Generally speaking, we'll never go beyond 1 year, and that's because taxes is due each year. And large companies are generally required to report their financial statements quarterly and annually. Periods less than 1 year are called interim periods, and a period that is 1 year is called a fiscal period. Here's something else which is really important to note, is that fiscal periods don't necessarily start on January 1st. But for the most part, that's what we'll probably stick with for this course, is January 1st starts, ending December 31st. So here's a problem. So Air Canada goes and records the purchase of an airplane. Can it be expensed? Here's another problem. How does the university or college record yearly tuition it receives in September? So you're paying for something in advance. Surely it should be recorded as revenue, right? Well, with both situations, they affect more than one time period because, well, you can't exactly count that as revenue until it's actually happened. And you can't really expense the airplane until you've actually matched up with the revenue. So the question is, when and how much should be expensed or recognized? And like I was saying before, it comes back to two bases of accounting. There's a cash basis of accounting, where revenue is recorded whenever there's a cash received or expenses incurred, means things are paid for when cash is paid. Or the second basis is the accrual basis of accounting, which follows the revenue recognition principle and matching principle. So what exactly are those things? Well, GAPs, generally accepted accounting principles, govern how we end up doing accounting, specifically here in Canada, and we have moved over to IFRS. So regardless, there are very close attachments or rules between the two. The revenue recognition principle states that revenue must be recognized in the accounting period in which it is earned. So if we're to go back 2 slides, it would be wrong to say for the university that this is in fact tuition which has been counted as revenue, because it hasn't been earned yet, and it's not earned until they actually provide the service. The matching principle says, this is also known as the expense recognition, each expense related to the revenue must be recorded in the same accounting period as the revenue it helped earn. The expenses match the revenue earned. So again, going back, the problem with Air Canada buying that airplane is that airplane will last many more periods than just the one that it was purchased in. And so when we try and look at those expenses, we have to try and match the expenses of that airplane, the depreciation, with the revenue it helps generate. So let's look at the pros and cons. With cash basis, the pro. Well, it's easy to record. All you have to do is worry about entries that involve cash. There's no adjusting entries. They're pretty simple. The downside is it can lead to some misleading financial statements. Imagine if a farmer bought a tractor and expensed $30,000 all in 1 year or all in 1 month. It would look like it lost a lot of money. On the other hand, we have this accrual basis of accounting. Pro? Well, it's more accurate financial statements because we're trying to match up and again approximate how exactly our revenue and our expenses come in. The downside, well, it's more difficult to create those adjusting entries. In fact, I would say coming from actual application, a lot more time and thought goes into those adjusting entries than just regular journal entries. And the adjustment's still based on approximation. So there may not exactly be a perfect allocation. So for example, you may say that a vehicle will only last you 5 years in the book, but in fact it lasts you 8. Or it could last you only 4. So there are other things that we deal with when it comes to those adjustments. Accrual basis is usually used, but business owners such as fishermen or farmers use cash basis as it's more appropriate for them. So it's used in different industries too. So adjusting entries, used to follow the revenue recognition principle, matching principle, and more accurately report assets, liabilities, and owner's equity. The reason? It's not efficient to record some daily events, for example, like the use of supplies. It would be silly to try and put all your time and effort into putting an entry in each day just to show that you use 1 pencil and 5 erasers. Expiration of items during the accounting period. For example, your rent is paid up front. Some items may be unrecorded and will not be received until the next accounting period. For example, a late telephone bill or bills that just come in the mail a little bit after the period is done. Happens a lot, and there are a lot of adjustments that are required for these things. So, adjusting entries are used for purchasing a building, equipment, any asset that lasts longer than one period, also called fixed assets or long-term assets. Use of supplies and insurance, magazine subscriptions, yearly tuition paid up front, depreciation, late telephone bills, and rent paid up front. So all great examples of where adjusting entries are used. Now this one here is a slide which is super important because it will go through the 4 different adjusting entries. So there's on one side, the left side are prepayments, and on the right side there are accruals. So prepayments happen when you pay for work that hasn't been done yet. And there are 2 types of people that you really consider. So like, for example, if you're prepaying for something like an insurance company, then that is counted on the insurance company side as an unearned revenue. So let's just give an example. You pay $500 for insurance for the next year, meaning starting 1 year from now. Now you haven't actually matched that expense with the period yet. You haven't got any insured. You haven't got the usefulness of it, but you have paid for it. So you prepaid for it. And on the insurance company side, this is money which they haven't actually earned yet. They haven't earned it because time hasn't passed. So this would go in as an unearned revenue on their side. Now, accruals on the other hand, these 2 are about work that is done but payment hasn't been done yet. And usually these will end up having something like an accounts payable or accounts receivable. Expenses incurred but not yet paid in cash or recorded. So usually these won't have cash but accounts receivable, accounts payable. And then there's accrued revenue. So for example, a painter may go in and they'll do painting on a property, and then at the end they get to it and they're like, okay, well they can put on the books that they did the work but they haven't been paid yet, and then there's an adjustment later on to say, okay, we have in fact got that money. So there's usually one entry for the work being done and then an adjustment later on. On the other side, there's accrued revenues where that would have been an expense for the owner and that would have been an accrued revenue for the painter. So there's always 2 perspectives. One, these are paid for in advance, and these ones are paid after work is done. So prepayments, you pay before work is done. Accruals happen you get the bills after the work has been done. So that's one way to look at it. And that's it. These are tricky concepts. Practice will make perfect. And the more exposure you get to these things and more different situations, the better you will become. Like I say in math is not a spectator sport. And the same thing goes for accounting. Practice will make you better. If you have any questions, always reach out to me. I look forward to working with you guys. Bye for now.